This is a video by John Lux on short seller manipulation technique of OTC Market Makers. This is not legal or investment advice of any kind. You want to seek competent advice from qualified investment professionals. Your situation may certainly vary, and the more you know about finance and business, the more you can profit. In the stock market, price is the best advertising. A stock that is going up tends to create the belief that it will continue to go up, and thus demand is created. Short squeezes, buying panics, are created by rapid upward price movement and so feed on themselves. Now, if I told you that I, as a market maker, could drop the stock price in the face of consistent buying and so go short and create panic selling, you might find this to be new and rather electrifying information, would you not? Here is a simple and little-known trick of market makers. Start with the inside bid-ask of the stock. Let's give a hypothetical market, 20 cents bid offered at 26 cents. With the last sale being at 26 cents. Now, of course, this is not a real stock. Any similarity between this fictional narrative and exactly what happened to a certain stock a few months ago is simply total coincidence, despite your wild suspicions to the contrary. A buy order for 10,000 shares is entered, and instead of being executed at 26 cents, the market makers made the sale at 0.259. So the buy order actually dropped the price compared with the last sale of 26 cents. So the stock shows 10,000 shares traded on a down move, making the buy look like a sale. 10 minutes pass and another buy order, this time for 20,000 shares, is entered and executed at 0.258. Another downtick on another buy order. So now the stock is down on 30,000 shares of buying only, no selling. Folks, that is not normal supply and demand, is it? You would expect that on buy orders the stock would go up or at least stay the same, would you not? Silly you! If the market maker now goes and hits the bid of his competition even for a small amount of stock, let's say 1,000 shares, the last sale showing now at 20 cents, and the stock is down 23% on heavy buying of 30,000 shares. But it looks like the stock is being dumped in a panic. What is the effect of this false appearance on the market? First, the buyers apparently have an immediate loss of 23%. Second, anyone with a buy order may hold off on buying to see where the stock stabilizes. If the company is trying to get people to buy the stock, as it has a right to do, it is going to be much harder to whip up enthusiasm as the stock looks like it is crashing. Sellers, if they panic, will now come in and sell. In fact, the stock could be so demoralized that, hypothetically speaking, it would close at 14 cents, down fully 46%. But again, this is only fictional, right? Now, if we check OTCShortReport.com to see what the volume of trading versus short selling look like, we might find that half of the volume is short selling. Theoretically speaking, of course. Presumably this would be by the market makers going short at 259 and 258 and elsewhere to push the price down. We would also find that half of the selling might be from long sellers who went into a panic. Perhaps, maybe. Now again, all this is merely fictional example. I would never accuse my fellow market makers of doing anything this destructive just to make a fast buck. But this is the type of thing that I now get paid the big bucks to discover and combat. Why? Consider what this means to the company. If the company had a $100 million market cap, reducing the price by 46% is a $46 million loss for the shareholders on a day when there was really nothing but buying in the stock. If the company is selling stock to raise money, say $10 million, it means that it now has to pay stock with a value of $14.6 million to get the same money. That's a loss of $4.6 million. And if the shorts are short 10 million shares, they made 26 cents minus 14 cents or 12 cents per share, or only 1.2 million, while the shareholders had a $46 million paper loss. Now, if you want to learn more tricks today, get yourself over to my website, investing-performance.com. Sign in. I will send you my book, How the Shorts Raid Your Stock, Destroy Your Company, and What to Do About It, so you don't have to pay to buy it off Amazon. And you can get my other books on Amazon. See you later.